Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
I guess this is the 4th of July edition, coming at you on the holiday, the 3rd this year.
Today's technically the 2nd, but we're going to wish you a happy 4th of July anyway.
Definitely I think it's my second favorite holiday behind Christmas.
Thanksgiving is my favorite.
You like it? Thanksgiving?
Yeah, like giving thanks.
It's a popular one. I like being outside, but I just sent you a text a couple minutes ago. 126 degrees in my truck when I went out and grabbed lunch.
That seems like a measurement error.
It's crazy. It's 99 in Boston today. Heat index is probably 110, but if you're right in the sun, then it's going to bake.
You know, the thing about 4th of July, I love fireworks. Do you like fireworks?
I love fireworks.
But I only like setting them off. I don't like watching them.
Oh, really?
Well, I like watching them shortly after I set them off, hopefully from a safe distance. And I've been kind of examining myself to understand why that is.
Huh.
So I couldn't really care less about a fireworks display. But when I'm setting fireworks off, that's fine. And I think it's because it's the thrill of potentially losing a finger. But like, it's the danger that makes it fun.
Yeah, your high risk tolerance. Yeah, I've never been as much of a fan on setting them off just because I just know so many people, mostly celebrities, I guess. Remember when the guy in the Giants blew off his hand?
Yeah, I do. They handed up with a claw.
It's a high risk move. I've seen a lot of drunk people setting off fireworks in my day too, and I just don't. I like watching them.
So I think that's the aspect that draws me to fireworks.
Is Miami known for its fireworks displays?
Oh, we have them all the time. Miami has fireworks for no reason. I would say every week there's a fireworks display. Often it's the cruise ships set them off.
Really?
So you had a busy week of podcasts here. You did Bankless, and then you also did Fidelity's mid-year crypto outlook.
Yeah, it was a fun week. So I did Bankless with David Hoffman and Jeff Dorman talking about MicroStrategy. We'll get into that, I guess. It was a busy MicroStrategy week, but really enjoyed the Bankless podcast. So give that a listen. And then, I taped the Fidelity one last week. Did I tell you I had to get makeup put on my face? It was like a full-blown TV show.
So this was in a studio?
In a studio, yeah. So talking about just the outlook for Bitcoin and talking about stable coins, mixed in a little quantum there. It was a fun discussion.
So as of today, STRC is back to $87, a relatively healthy. I mean, it's not $100, but it's 87. What is I guess we should just get into it right now. What's your assessment of where strategy is?
So MicroStrategy came out on Monday morning with what did they call it? Some new framework. What's the exact terminology here? Digital Credit Capital Framework. And they announced 5 things. Number 1 was that they're making a change to their US dollar reserve policy. They're extending that. They basically raised over $1.2 billion of at-the-money common equity sales. So they generated cash last week.
That wasn't just saying that they could do it, they actually did do it.
They actually did do it. So now they have 17.4 months of dividend coverage for the preferreds, and they have $2.55 billion. So that was the first thing they announced, is that they have more cash via these at-the-money offerings. The second thing they announced was that Stretch, they have moved the dividend up to 12% annualized, and they asserted that their objective is to have this thing trade between $99 and $100. It's their objective. The third thing they announced was a digital credit repurchase program. So they will take up to $1 billion to repurchase STRD, STRF, and STRK, the preferred securities. Notably, this is not going to be funded out of the US dollar reserve. They would sell Bitcoin in order to repurchase this if they did it. The fourth thing they announced was a common equity repurchase program. They said they'll take up to $1 billion to buy back MSTR common stock. This will also not be funded out of the US dollar reserve. They would sell Bitcoin in order to do this. And the fifth thing they said was that they now have a new Bitcoin monetization plan. They could sell up to 1.25 billion worth of Bitcoin to do the digital credit repurchases and the common equity repurchases. So the net on this is that this thing is just turning into an actively traded hedge fund for Bitcoin instruments. I mean, they could be buying equity, they could be selling equity, they could be issuing preferreds, they could be buying back preferreds, they could be selling Bitcoin, they could be buying Bitcoin. So, that's kind of what is out there. As I said on the Bankless podcast, there's no bankruptcy risk on this. There's no imminent disaster on the horizon. They do have the puts on the converts coming up in September of 27. They have $1 billion that could be put back to them potentially. So they'll have to do some refinancing transaction or somehow pay that down. They didn't talk about the converts in this plan, but yeah, busy week. But I think the net is that this thing is just an actively traded Bitcoin hedge fund vehicle.
Here's the problem that I have with that. Saylor is potentially the worst trader in history. Hate to say it, by the numbers, might be the worst trader in history. So why would you trust him with a large pool? Let's say he really is treating this as more of a hedge fund than just a kind of slow and steady accumulation vehicle. Why would you want him, of all people, to be running that strategy?
Yeah, I mean, Jeff Dorman on the Bankless pod made an interesting point that you just would never see this in a equity security because you'd be qualified as an investment company. So the fact that it's Bitcoin, it's this commodity that doesn't really fall into that SEC jurisdiction makes this, I guess, possible. But yeah, I mean, if you want to invest in a Bitcoin hedge fund, there's other Bitcoin hedge funds to invest in. Now, they're not available on brokerage accounts for Joe Retail, but there's also a reason for that.
So the thing is, if I was entrusting my money to a sort of actively managed hedge fund, I would want to give it to Jeff Park or something, or someone very quantitative, someone who's looking at the Saylor, as far as I know, doesn't spend his days looking at, Bitcoin on-chain signals or anything.
No, but he puts out some really good AI stuff on Twitter.
Yeah, so he makes AI illustrations of himself. So, I mean, this isn't to disparage Saylor, but his skill set, I think, is more fundraising, getting people excited about the stock. It's not really finding signals.
I mean, he just wants to buy as much Bitcoin as he has to. And so this thing on Monday, this new framework, is just to give him the flexibility to survive. But I'm sure if you really put truth serum into him, he would say Bitcoin's going to go to the moon, and you guys are worried about something that you don't need to be worried about. You're worried about me making convert payments in September of 27, and by that point, Bitcoin's going to be, on Mars.
Right. Well, it's a brave new world of strategy.
I did look into their mNAV, by the way. We talked about that last week. So
yeah,
it's the way that they calculate mNAV. This is going to be a little bit boring, but it's really an enterprise value divided by gross Bitcoin value, mNAV. So it's the way Strategy calculates it is the numerator is common equity market cap. Then you add debt principal plus preferred notional. You subtract cash, and you divide that by the gross market value of Bitcoin. A more conventional mNAV calculation based on common equity is seen at a lot of the other DATs, and that's just common equity market cap over Bitcoin value plus cash minus debt minus preferred claims. And so, why does this matter? Here's basically the nuts and bolts of it. Above a 1x, as the cap table is currently constructed, Strategy's convention would actually report a smaller premium. Once it goes below 1x, it reports a smaller discount. And so if you had calculated it what I would think would be the normal way, the common equity mNAV, they should be showing a lower mNAV number, but they're not because of this enterprise value calc. So that's the answer to that question.
And am I right that they changed the mNAV methodology?
I don't think they changed. I couldn't find evidence that they changed the mNAV calculation, but they did change the methodology around Bitcoin yield, in a couple other metrics, but I didn't see the mNAV change. It's possible they did.
So I guess the crisis is effectively over. I mean, they kind of did the hard thing, or they at least gestured at doing the hard thing, which is selling Bitcoin. So that information should be percolating into the market. They haven't actually sold any Bitcoin yet beyond that 32 BTC slug, right?
They haven't disclosed it. It's possible
Right.
that there's a Monday filing that says we sold some Bitcoin, but I don't know. I mean, they still have this issue. They just kind of kicked it down the road, right? They're just hoping the price of Bitcoin goes up.
The various preferred instruments are not trading particularly well, frankly. Beyond just Stretch, it's Stride and Strike and Strife. They're all off the $100 mark.
Yeah.
So they've recovered, but the market is still feeling a little weird about it.
Agreed. Should we hop into the deals of the week?
Yeah, first up with deals, it's Venice AI. This is Eric Voorhees' privacy-focused AI platform. There is $65 million from Dragonfly, Coinbase Ventures, and North Island Ventures.
Then it's Tech Dollar. This is a stablecoin-based credit platform for private company shareholders. They raised $3 million from No Limit Holdings and Reforge.
Then we have Orthogonal. That's an infrastructure layer for AI agents. There is $4.3 million from Pantera, Y Combinator, and others.
Adjacent is a prediction market index platform that raised $2.5 million from Knight Capital, Van Eck Ventures, UFO Holdings, and others. UFO Holdings, that's a cool name.
Interesting. Never seen that one before. Framework, the crypto venture capital firm, they raised $400 million for their new fund. Congrats to Vance and the whole team over there at Framework.
Yeah, it's psyched for these guys. Vance, Michael, done a really good job over at Framework. So congrats on that raise. And then the last deal of the week is Securitize. This is a tokenization infrastructure company. They went public via a SPAC merger this week. I guess it was today, this morning. $400 million deal. So congratulations to Carlos and the team at Securitize.
So aside from strategies, machinations, there's really only one other news item this week, which is OpenUSD.
OpenUSD. And yeah, so a consortium has been founded here. It is 140 different firms are signed up for a new stablecoin called OUSD. It will be, classic consortium, I guess. It'll be governed by its members. The initial CEO is Zach Abrams, who founded Bridge and later sold that to Stripe. The backer list is longer than we'll name on this podcast, but it includes Stripe, Visa, MasterCard, BlackRock, Boney, Yellow Card. I mean, a lot of players here. It's positioned as a neutral rival to Circle and Tether. It's going to share the economics with the participants. The exact mechanism is a little bit unclear here. What do you make of this?
Yeah, this has been a really interesting announcement. I mean, haven't we always said we thought something like this would happen?
Yeah.
We've long thought that the model where the issuers keep the float revenue, that probably won't persist indefinitely. And I wrote a post over a year ago saying the stablecoin duopoly is ending, though I thought the form it would take would be more issuers rolling their own stablecoin and more float providers like fintechs rolling their own stablecoin. This is a little bit like that, but it's more efficient because there's just one big stablecoin, and to the degree that you provide float that your users deposit into it, you get the value with the, I guess, a small like maintenance fee. I think it's very smart. I think it's, people are contesting the value of all the names on the press release. It's like over 100, I think. And just saying, well, it's easy to sign a press release. That is true. But, and, everyone's saying, well, all these consortiums have failed, what's the other? Global Dollar didn't really take, and the Libra didn't work. But like when consortiums work, they really work, So Visa is obviously the canonical example. So I don't see why it couldn't work. I know everyone says it's hard to create a new stablecoin from scratch, and that's true. That's why you need a big consortium, you know? So assuming they have the incentives right, and I think the incentives look good to me, I think it can totally work.
Yeah, but here's the thing. Like, the incentives are not fully understood here. And I think these incentives could actually push towards more of what you're saying around a balkanized approach. Because if you're a member of this network and you're, say, 135th out of 140 in terms of the float that you're bringing to the network, you're not going to be making much by way of economics here. So you could see a world where just rolling your own, there's some equilibrium there.
But you're making your pro rata share.
Pro rata share, but
you make what you bring to the table.
You make what you bring to the table, but what is the tipping point? And I guess it comes down to what is the OpEx to keep this thing up and running. There's going to be some logical equilibrium where trying to roll your own or doing some white label would make more sense. And so I think they're going to have to really...
So you're saying certain firms might find the fixed cost of membership prohibitive relative to their earnings from the system.
Yeah.
And it might be cheaper to roll their own with Anchorage or something like that.
Yeah, or it might be more advantageous to cut a bilateral deal with Circle and just use Circle on your platform.
Yeah, I mean, the secret is that Circle does share revenue with, I guess, other companies that bring float into the system, but it's kind of arbitrary and negotiated each time, as opposed to, in theory, I guess, OpenUSD would be more standard. It was very interesting to see Jeremy Allaire, come out and directly address this.
Well, yeah, the Circle stock sold off pretty aggressively. What was it, down like 10, 12% or something on the day? So he had a long tweet. He highlighted some things that I think are very real around, okay, so you're saying that you're going to have zero cost to mint redeem, but you can't just have the window open to everyone. There's a huge compliance cost there. So Circle does need to make some money to just service the compliance obligation. There's also just a huge liquidity and network effect there. And, there's not a great track record of consortiums in the stablecoin space to date. So he's saying what he's paid to say, but a lot of that has validity.
Yeah. I'm happy to see it as a somewhat neutral. Are we neutral? Third party?
Yeah, I think we're neutral, right? We're not invested in Circle and we're not invested in Stripe. So.
Yeah, I think this is great. It is interesting. I mean, do you think that this is a Stripe thing beneath the hood? Is this a Stripe thing? I mean, Zach Abrams is running it.
Yeah, Zach Abrams is running it. I'm sure this will run on Tempo as well.
I think that could actually be the undoing if it's seen as being too favorable to Tempo. Or Paradigm by extension. So I think they need to be careful to keep it neutral.
Yeah, I agree with that. But, you think about who could really benefit here in terms of just bringing assets on the platform. Stripe would be in a great position, right? So this could be a big moneymaker for Stripe.
I mean, this list of names is like the market map of all companies that use stablecoins.
I know, it does.
Plus an additional 50 banks that I've never heard of.
Bunch of banks that aren't really doing much in the crypto space either.
Who are some of these banks I've never heard of in my life?
Yeah, Bank Lumi,
Non-Guip Card, Banca Transylvania, Devi Vienda. There's some pretty exotic names. Freedom Bank Kazakhstan.
Yeah, maybe they're just making up banks. Who knows?
Maya Bank.
That's a real one, I think.
Oh, sorry for not knowing Maya Bank. I mean, I'm impressed. I'm genuinely impressed. It's like all of the stablecoin native companies, all the stablecoin fintechs, all of the fintechs, all the remitters, a ton of asset managers, a ton of banks, and a bunch of tech companies. I mean, it's a great. I'm impressed by I know people say don't be impressed by the press release. I'm impressed.
Yeah, I don't know. This is where I come down on. All right, if you can get 140 different companies to put their name on a press release for consortium, that just tells me you guys haven't gotten into the details yet, because it's so easy to just say, yeah, we're committed to using this thing. But if you actually had a consortium that was in production, I don't think you'd have this many out of the gate. I mean, maybe that's just me seeing these things in a TradFi context and being super skeptical, but I think where people fall off of this is when you start to get to the nuts and bolts of how much does it cost to do this, and then how much money will I make.
So, you remember D. Hawk's book? Did you read it?
I did, yeah.
The Chaotic Organization.
The Rise of the Chaotic.
The Chaotic. I mean, he spent a very long time setting up Visa. It was like, I want to say the better part of a decade, really.
Yeah, yeah.
So, who was the D. Hawk that went around and negotiated? Or is that just beginning? Has that process not even begun?
I think it's going to be Zach Abrams, don't you think? I mean, I think
Yeah.
it seems like it's day one, really. I think the easy part is just getting people to say they're doing a blockchain initiative here. And the hard part is actually bringing this to production.
But I like that they're trying something ambitious like this. Like, of course, a consortium has a low chances of success. But if it does succeed, it's going to win.
100%.
Like, for sure, it's going to win. So I'm glad they're doing it. We should try hard things.
I agree. This is a hard thing to do. I wish them success. I still think that there's going to be a lot of stable coins. So that doesn't really change my outlook for now, but this would be an argument in favor of a consolidation.
Yeah. And I like this from a producer surplus point of view. Maybe I'm using that term wrong. I like this from the point of view of the individual fintechs and et ceteras that would like to use stable coins and want a better deal.
Yeah.
So I'm actually very glad to see this kind of initiative. I think it's right.
I totally agree. All right, let's move on to this turned into a big news story for good reason. President Trump's 2025 financial disclosure reported $1.4 billion of crypto income for the year 2025, led by $635 million in royalties from, quote, celebration coins. I guess that must be like Trump and Melania Min coins. $500 million from World Liberty Financial token sales. Kind of not helping the market structure push here.
I saw some funny tweets about this, like Trump is the only guy to make money in crypto in 2025.
Yeah, probably not far from the truth, right?
I love that they call them celebration coins. That's incredible.
Yeah.
Everybody knows what we think of this. You can just go back to the foundation of World Liberty Financial and look it up. But this was very obvious that it would go this way. I hope in my heart that, deep inside of Trump, there's still an abiding affection for crypto that has nothing to do with his personal financial interests. But I don't know if that's true.
No, I don't know if it's true. I also don't know if it matters, but we just need him to sign a market structure bill here. But we also need that market structure bill to get out of the Senate.
Yeah, it would have been much better for us if he had just adopted a relatively pro-crypto stance and then never thought about crypto ever again.
Yeah.
That would have been
great.
much. Now we have to deal with the fallout of this for years to come, unfortunately.
In other news, Robinhood, they officially launched Robinhood Chain. I guess they had a big event this week. It's an Arbitrum-based L2. They have 24/7 tokenized stocks going. There's a Morpho-powered USDG lending platform called Robinhood Earn. There looks like there's an Athena integration. There's perpetual futures built on Lighter. There's a lot of crypto native stuff on this Robinhood chain.
It's interesting because their crypto business has been suffering a little bit, right?
Yeah, suffering with volumes. I think, Coinbase volumes are down a lot too. It's, I think post 1010, this market just took a big step back as it related to crypto trading.
Speaking of 1010, Mika in the EU has, I guess, I don't know, I don't want to say banned Binance, but Binance has not been able to transition to the new Mika regime, and they are forced to, I guess, wind down services in the EU. Is that right?
Yeah, I think there's a deadline to get into this new framework, and it doesn't seem like they made the deadline. I don't think Bybit did either. So my understanding is that they just don't have authorization to operate in the EU right now. So I wonder if that's how they enforce that. I guess they just do the shutdowns based on the IP addresses.
That is pretty tough for Binance. So they've suspended all activity for EU residents. 210 crypto firms were authorized. So Coinbase, Kraken, and OKX all made the cut in Europe. Binance has said they're going to reapply through France.
I trust Binance about as far as I can throw them. 1010, we still haven't gotten to the bottom of what happened there.
Yeah, I don't know if the crypto ecosystem is going to forgive Binance for that one.
In other news, MetaMask has launched a money account. It's a self-custody wallet based on mNAV blockchain. It offers a 4% yield on mUSD stablecoin. So here's an example of a new stablecoin. I guess this would support the balkanized approach.
Did you see that Twitter is also launching its own like financial X.com is launching its own like personal finance product and potentially card and payment processor and everything?
No, I didn't notice that. I did know they had MTLs. I didn't know it was going to be that type of a product though.
Yeah, it looks to be like effectively a neobank style product.
Very interesting.
The rumor is that they're going to offer 6% yield, which obviously a loss for them, but paying for users.
Huh. I don't know if that's how I think about X as a financial services app. That's not how I use it.
But that's what Elon wanted from X in the early 2000s.
I think the first thing that I'm going to need to see before I go in that direction is just a way to cut down on these like bot accounts. It just feels like it's overrun.
So, did you ever follow this DAT K-Wave Media?
I did not.
So they are a NASDAQ listed Korean K-pop company.
Oh, I think we talked about this.
So they announced a year ago, in July 2025, they announced $1 billion in financing capacity. Their objective was to scale their holdings towards 10,000 Bitcoin. Guess how much Bitcoin they bought in the end?
So they were going for 10,000 Bitcoins?
Yeah.
Did they get 10% of the way there?
They got 88.
88 Bitcoins.
Yep. So unfortunately, they had to sell them later.
And they later sold them. Oh no.
So they're not a DAT anymore. They are now doing GPU compute. So they're doing AI infrastructure.
Sometimes you just got to pivot to the hot thing, don't you?
Yeah, so that's just one of many DATs that have ceased to be DATs. There are many more need to go, but that's your DAT failure of the week. I'm sure there'll be one next week too.
I'm getting a kick out of these 4-year cycle people that are saying, look, any minute now it's going to be the bottom. Just look at the 4-year cycle. It feels so hard to bottom without these DATs just going out of business. Don't you feel like that's part of the healing? We just got to get rid of the DATs.
It's a little bit superstitious to think that like to have a good harvest, we have to like sacrifice someone, It
is.
But also I think it's true in a sense that there's a capital cycle of tacking on leverage and then delevering. So that's the real cycle. And so when people explode, that's because there's a deleveraging.
Right.
And we still haven't worked out the leverage because there's still coins sloshing around in these DATs that need to be spit out.
There is. Now, I guess the other thing, though, is every cycle when we kind of bottom out, we think that all of the phony companies get washed out. And there's always a few that make it through.
That's true.
Not everyone goes away.
And not every lender collapsed in 2022.
Right.
And not every DAT will collapse. I mean, Saylor was around in 2022. It just traded at a discount, I think.
Not every lender collapsed, but a lot of the lenders collapsed, and not every one of them actually went into liquidation, is what I would say.
In my subjective view, not enough of the DATs have been wound up in whatever that means, whatever form that'll take. Not enough of them have done it to signal bottom, in my opinion.
Yeah, and I think some of these things end up just getting stuck in purgatory because I don't know if they're big enough for like who you'd expect an activist like an Elliott or Dan Loeb or someone to come in who is it? Seba Capital to come in and like just rough these things up and make them liquidate. But there's a lot of risk in that trade, and I'm sure there's other trades that are more interesting on just regular way equities. So I think they could just be in purgatory for a while at these DATs.
Yeah. And there's an incentive on the part of the management team to keep it going, just to harvest whatever it is, the 3% a year.
Oh, plus a salary. I mean, yeah, you can just be sitting on this melting ice cube for the next, 7-10 years, maybe.
Yeah, and I guess there's just not that many legal mechanisms to crack these things open.
You could certainly go after some of the public statements. Some of the public statements from people that operate these DATs are preposterous.
Yeah, I mean, there's enough class action lawyers, I think, are just going to have a ball here.
I know. All right, so I think that is it for the week. You have any fourth plans?
I'll set off some fireworks and hopefully I report back with all my 10 fingers.
All right. Well, be safe, and listeners, be safe. Have a safe and healthy weekend. We will see you on Monday.